Can this cryptocurrency be a hedge, a defense against inflation when you have governments around the world anticipating recession, maybe tipping over into a 1922 style depression, where they have to start printing more money to get it into the system because people around the world, because of COVID, we haven't seen this many people losing their jobs this quickly for a long, long time.
So even before the pandemic, many were concerned, myself included, about the unprecedented level of debt, world record levels of debt on the public sector's balance sheets, on government balance sheets, in the private sector and elsewhere. And with the pandemic, that debt picture has only worsened. And historically, hard assets, traditionally gold, but also real estate, other scarce, difficult to mass produce assets and stores of value, art, have done well during periods of inflated risk of financial crisis. And Bitcoin, as we have argued in a blog post titled, "The World's Hardest Asset is Ironically Virtual," that being Bitcoin, is in many ways superior to gold because it has a capped supply. And this is digitally, algorithmically scarce in a way that gold can never be, or anything physical that in theory, an Elon Musk could go mine more gold one day in the Mars asteroid belt. And so this algorithmic scarcity is very attractive for people who are concerned about more money chasing the same number of things. And you see it in stocks, you see it in real estate, you see it also with crypto assets like Bitcoin. Asset prices are going up as this wall of stimulus and money printing is occurring. And this is not to criticize that effort. People are in serious trouble in many parts of the world, and some stimulus is certainly warranted. It's been a bipartisan effort in the United States and elsewhere to support.
If there is to be a course correction in this upward trend with this particular cryptocurrency, indeed with any cryptocurrency, what will the course correction be? I mean, what will be the spark that leads to the course being corrected?
Course correction in what way, I guess, is the question. Are we talking about economic course correction? I mean, the only people that are saved in their proposition are essentially three folks on the TV, and I'm assuming that you don't have any Bitcoin. So they're suggesting that because if we hit a 1922 depression, that Bitcoin is going to pull us out of it. There are going to be companies that will survive. There will be companies that are managing it, that have invested in it. And assuming, this is a big assumption, that it stays up in the 40Ks, even to 100Ks, then those guys will be fine. And yeah, we're going to flip into a new era, which every turbulent era does. You lose your Dale Carnegie, you lose your Carnegies and you get your JP Morgans after each one of these things. So we're in a very uncertain period right now. But has the U.S. government invested very much into Bitcoin? No, they have a little bit, I'm sure, but they're not talking about it actively. Has any government out there changed their entire gold hoard to something to virtual currencies? Absolutely not. It's not a sure, it's institutional, but it's definitely not political. It's definitely not governmental.
Is that part of the appeal for all investors in cryptocurrencies? To pick up on that point that John Biggs was making, it's not linked per se to a central bank. It's not linked, therefore, to the US dollar. So it's not linked to the Federal Reserve. It's not linked to the euro. It's not linked to any of the lower down the food chain currencies. Therefore, it's not linked to any president or prime minister or any finance minister anywhere in the world who can talk to a central bank and literally govern economic policy.
Yeah, those are great points, and all ones, Peter, that I would have made. You stated them more eloquently than me. So on the back of John's comments, yeah, that's actually part of why this is bullish, right? You have waves of adoption and market participants who come in over time. First it's the technologists, then it's the high net worth individuals, then it's the venture capitalists, Then it's the family offices, and now the institutions. You have public companies buying it on their balance sheet in the U.S. You have insurance companies like Mass Mutual. That's a 169-year-old massive insurance company buying it in their general account. So the next wave of this is going to be more of those, more insurance companies, more public companies. Ultimately, it will be sovereigns and governments who are buying this. That is the direction this is all headed. That's what makes it asymmetric and helpful to people. And to the point, Peter, that you make about it not being linked to a fiat currency like the dollar, the euro, the yen, that is part of its value proposition as well, because as we're seeing with the Fed and the expansion of the monetary supply, if you leave your money in the dollar, you're going to lose half of it over the next 5 years with the rate of monetary expansion. So when you have a hard asset, like Garrick was mentioning, like Bitcoin, that has finite supply, that can't be inflated away by a politician, a central banker, a CEO, right? If Tesla goes up 10x, what's Elon Musk going to do? He's going to print more stock. You can't do that with Bitcoin.
What do you say to those people who say these cryptocurrencies are a great idea? And they say they're a great idea because their logic, some of their logic says this: it means that money, in inverted commas, can be fairer in the way it's used by the people who use it. So that's why certain administrations in the West Indies are experimenting with this. And if you look at the continent of Africa, where a banking system for a lot of people simply doesn't exist, their mobile phone with an app becomes their banking system. So you can live in a poor country, and I'm putting that in inverted commas, or a country that has little/no infrastructure, but you can still do banking and in effect live in a cryptocurrency world.
Well, so I think let's talk about that first point. I mean, you can still do banking, and the banking doesn't necessarily have to be connected with any sort of cryptocurrency. My view of the cryptocurrency, and I think they said it. I think the other two guys said it best when they basically said, look, who owns this right now? It's the early adopters, technologists who know exactly how to hold it. You never want to hold it onto any online wallet. That's the first trick. So they know exactly how to hold it without getting robbed. They also know how the institutions know how to hold it now. So and presumably the governments are eventually going to know how to hold it, but the average person doesn't know how to hold it. So there's really no benefit. So you're still using a middleman. The goal of this whole process, the whole system, Satoshi's original vision was that this was going to be a democratized, completely decentralized banking system that anybody could use. It's not. It's really, really difficult to use. You can get wrecked in seconds. And yeah, maybe it's going to go up to 100,000. You're going to invest at 99, and it's going to go back to 97. You're going to lose. So the same thing as the dollar is true of the Bitcoin. But for that banking person, that person banking in Africa, or the person banking in a developing nation, there's plenty of systems in place and plenty of systems available that you can do exactly that without using cryptocurrency.